Hey traders, Raghee here. Let's get a quick audio and video check-in. I think we're good to go. All right, happy Friday, everybody. Welcome to Charts and Coffee for non-farm payroll July 2. We've got that data out, by the way. I'm taking a look at a 5-minute chart on of the S&P. By the way, this is on TradingView. And by the way, those of you that have been asking for my toolkit on TradingView, we should be getting that completed probably at latest sometime next week by mid-month. So everything but my HPMRs are going to be available on TradingView. And that's a big request that we've been having. You know that I use TradingView a lot here in Charts and Coffee. We use it quite a bit in the Sector Secrets room. So great news on that front. Anyways, that's what I'm looking at here. And you can see that we're moving higher. One of the things that I do, by the way, and I don't have it active right now, is I will hook my TradingView up to my TradeStation platform. So I get a live futures feed. And with that in mind, so take a look at that. And so the three platforms that I focus on the most, by the way, TradingView, TradeStation, and Thinkorswim. So between those, I have a really good look at what's going on in the market. And this is what we have on the S&P live at the moment. So really bullish reaction to today's non-farm payroll. And when you think about the path of least resistance in the indices, as we've been talking about a lot here in Charts and Coffee, don't short a strong market. We've been seeing a lot of folks wondering if the markets are extended or too high or ready for a reversion to the mean. And I just don't see that happening. I do see myself getting a haircut in the near future, though. All right, so let's get to it. Doing the Friday cash thing. All right, great to see everybody. Happy Friday. Let's get to the questions. So first of all, when do I start searching for earnings plays? All right, when do I start searching for earnings plays? And how do I scan for companies that meet the 642? So it's actually pretty straightforward. Let me take you over to, so first stop is, how do I scan? I don't scan, not in the sense that scanning is usually perceived. What I look for are heavily weighted stocks in the indices and sectors. I will follow them. This is a free site, estimize.com, ESTIMIZE.com. I'll program, you can see the left margin here. These are all stocks that I have, as Estimize calls it, followed. And then they end up just automatically added to this little calendar list on the left. So really simply, I look at today's date. I look at what's 6 weeks out. And then I start to factor in what I then want to go look at. Heavily weighted comes first. And then I go look at what's double green. Now, that's the basic rundown. If you want a more detailed explainer of 642, I believe it's probably been pushed back a little bit, maybe to page, 8 maybe. But there are two updates, and I'm going to see if I can't find it for y'all. There you go. Push out to page 6 and 7 of countdowntrader.com. Probably 6 and 7, or at least 6. Page 6 of countdowntrader.com, and there's a full explainer on the 642 earnings window. And what's really cool is Trish has both what to look for and then also after earnings. What do you do after earnings? So pre and post. So check out those two updates. We posted those back in April. Now, this is a process that I've been using for many, many years. So double green and on that Estimize calendar. That's the basics of it. So start there, my friend. All right, next up is ASML. All right. Hey there, Alex. Stalking ASML for a double green. Pullback by SMH has been, yes, and fuego. And it's nice to see one of its major holdings pulling back. So keep in mind that this has been a little bit more volatile in pullbacks, which is fine to sort of factor that into your expectation. I would love to see, Alex, you know what I would love to see here? Yeah, I would actually love to see if we can get, I'm not in any rush to get a fill today. However, I would really love to see if we can get another Darvis signal forming on this inside the wave. That's what I would love to see. And take a look. One of the cool things about being able to put a lot of my tools, especially on the daily time frame, on TradingView, is we can see all the volume ledges. So I've got a ledge here, got another good group of ledges there. So in this area, which is where we are, I'd love to see this market catch a bid in that zone of the ledges. So that's excellent, excellent. So we have price. I'd like to see the pattern, and then we have some volume confirming. And earnings are we in the 642 window? Remember, we are inside the 3-week window. I don't mind being inside 3 weeks. I don't necessarily want to start building directional debit long calls inside of 2 weeks, because now I'm closer and closer and closer to that higher implied volatility and essentially that potential vol crush. Okay, so keep that in mind. But I like it. I like it. If it's the best double green, cool. If not, definitely check out the rest of the SMH for other structure like this, maybe even with some better respect for the wave. Okay. Thank you very much for the question. Hey there, Kevin. Can I please take a look at EWC? EWZ, EWW. I'm not super into Canada right now, although it probably will break out again based on what's been happening in crude. EWW, Mexico, very similar situation. So what I would like to see, so we've got this large move, and then I want to see something like this. And if I can get more blue grab candles, probably 4, and maybe, use the volume ledge for the lower end of the range, that might be a good place to front run the breakout. And then EWZ, Brazil. Brazil is actually a potential, that move right here. I'm not really that concerned about the fact that we've gone double yellow here. And then this blue candle is landing us right in the middle of a really overall good looking upward angling wave. That could be a really nice setup. Yeah, that could be a really nice setup there. I'm writing that one down. We've had our eye on some of these countries. EWZ, what is it going to be fragile to? It's going to be fragile to the softs and weather and a bit of the, so EWZ is in sort of the same category as EWC because of the sensitivity to commodities, but good structure there, nice pullback. The only thing I might say, and if you're in the sector secrets room, you're probably already guessing, Rob, let's see if we can't get a nice Darvis and possibly get an inside day. That's my mocking up a candle with my awful drawing skills. Let's see if we can't get a nice inside day, maybe a minor low. And then Monday, we might be able to set this one up. I would say aggressively, and I don't know what the status is of the option chain on EWZ. That might be a little problematic. We'll have to check on that. But I do like that setup. That's a nice looking pullback into an overall green market. The size of the candle probably would merit us waiting for, again, that pause candle, but not shabby at all. Thank you for the question, Kevin. FedEx. So FedEx is going to bring us into the conversation about the larger sectors that it is a part of. 1, 2, 3 maybe here. Jess? Yeah, I'd say you might be looking at a 1, 2, 3. So the way we want to do that is, I think we're fine with the candle count so far. Yeah, only 9 bars, 13 days. I don't want it to exceed, just so you have a reference, I don't want it to exceed 21 bars. And the write-up of the way that I trade, the 1, 2, 3s is in the Countdown Trader. So it's got a lot more it could play with. So keep an eye on the number of days it's going to take, the number of sessions it could take to break. All right. The next thing is the actual pattern. So 1, there's your swing high. 2, where's my drawing tool? 1, is it not working? Oh, wrong tool. There we go. So that's the 1, 2, 3, and we actually have to break through here. And that would be what we're looking at right there. Okay. So this level there, right there, this is the swing high. You see there's a Darvis there as well. That's what I want to see broken within that allotted time. So that's a 1, 2, 3. Nice volume ledge accompanying the swing high, which I love that. That's going to help. Nice volume ledge here. Nice volume ledge at the 3 spot. This is the retracement right here. This is the swing high. This is the lower low. That's the 1, 2, 3. Good old fat. The only thing I will say, this is a continuation 1, 2, 3. This is not a reversal 1, 2, 3. This is a continuation 1, 2, 3. For those of you that are not familiar with my interpretation of a Dow 1, 2, 3 pattern. 100 plus year old pattern that is still relevant today. I've traded quite literally thousands of these patterns, intraday and end of day. They are amazing. So I'd say that's what I'm looking at on FedEx, but I would also say that keep an eye on the larger sector ETFs that FedEx is a part of, boats and tide, right? Yes, it could probably go off and do its own thing, but let's not assume that, okay? Foxtown asks, I know you state yellow bars are neutral. Well, yellow on the JT multi, blue on my grab. I know, a little bit of a disconnect, but yellow on the JT multi, blue on the grab. So if we go from green to yellow, do I still look at that as tepid bullish? So if we go from green to yellow, what is likely going to accompany that transition on the grab candles is a pullback. And oftentimes what that's going to, again, on the JT multi as well, that's going to be a pullback. Pullbacks will oftentimes be what is the reason for the blue grab candle, for the yellow box, especially on the lower row of the JT multi. And if I'm looking for a pullback and the previous trend was of high quality, was set, was bullish, that's okay. Example would be green, green, green through here, right? Green, green, green. And then all of a sudden it's yellow. Well, is that a reason to reverse? No way. It's just a more substantial pullback, and it ended up being a really nice precursor to a little bit of follow through to the upside. So you might say, well, Rag, what about this right in here? What yellow again? Notice the one thing we did not have with the previous yellow. So you could ask yourself, is this yellow accompanying any red? Do you see the difference? So you want to put the JT together. See, it's not either or when it comes to the grab and the JT. They work together. If there was redundancy, I would just take off one of the tools, but it's not. You really want both of them. Okay. So I hope that helps. I hope that makes sense. Thank you, Foxtown. All right. Are we going to have coffee on Monday? Oh, right. Well, if you know me, and I think a lot of you do, we don't skip on holidays. I love looking at the markets on a closed, when the markets are closed. And what better a day than celebrating Independence Day to look at charts? I mean, really. And the habit for me comes from years, 2 decades of forex trading, because 4th of July is not a global. It doesn't shut the forex markets down, right? Only 2 holidays do: Christmas and New Year's Day. So I'm used to looking at the markets after 20 years of forex trading anyway. And so yeah, we probably will. I'll be having coffee when I have charts and coffee. So yeah, probably. I don't see why not, Paul. I don't see why not. So yeah. All right. Can I check ABGO? Of course. Structure first, right? Always structure first. I'm not saying there's not a possibility for ABGO to do something. What I will say is it's a sideways market. It's a mix of the grab candles in terms of structure. It's kind of a mess. If I have a choppy market, and I would call this chop. If I have a choppy market, what I'll say is slow stochastic. I would say ready, aim, fire. I would use the Darvis to recognize the resistance and the support of the range. I would cut the range in half, or even, look, I'm not saying this is fib work, but pull a fib and know where the 50% is, know where the 382 is, know where the 618 is within the range, and build a position from as low within the range. I would prefer below the 50%, below the halfway mark of the range, as close to the Darvis, the Darvi, as possible. And then if there's a couple Darvises down there giving us a great zone, that would be a great place to build a long call position. So, I would probably, because of what's happening broadly in the markets, especially around tech, I'd have bullish bias. So if I can take advantage of something, even a volume ledge, which is what we have here, and build a position down in there, kind of not unlike yesterday's candle, but I'd like to see it maybe a little bit lower, but not unlike yesterday's candle. That's a terrific opportunity to build a long position within the chop. Will I want to prioritize chop is the bigger question. Do I really want to prioritize a non-trending market over a trending market? And usually not, no. So, if you've exhausted all the other opportunities and this is absolutely something that you want a piece of, that's fine. But it's just structurally probably not near the top of the list, but definitely tradable. Definitely tradable. All right. Does HPMR work with forex? Fernando, yes. And in fact, Fernando, not only does it work with the HPMR, with the forex, it's where I created the process. So the first volatility studies that auto chartists, the data, right? So the data that I needed to project the highs and lows, the historical volatility, it was available first in forex, and that would have been about, I'm trying to think when my last book was put out. Would have been out before my last book. So my last book talked a lot. I had sections in that book about auto chartists. You know what? I'm trying to remember when that darn book came out. I'm gonna Google that right now. I'm gonna Google myself, because I've been talking about it a little bit. I just really, now it's just, I'm curious as all get out. Forex on 5, 2010. There you go, 2010. So, and I was using it about a year or two before the book came out. So call it 2008. And I created that process back then. 12, 13 years ago. That sounds about right. 12 to 13 years ago in the Forex market. So yes, absolutely. And happy Friday to you as well, my friend. Do I like the daily chart? And hey there, Matthew. And a pullback in UEC. I don't view this as a pullback, my friend. This is actually chop heading down to possibly an oversold buy support. So pullbacks would require more a look like this, right? That would be a pullback. We've been moving sideways too long. So this is really, at this point, chop. This is back to that ready and fire, slow stochastic conversation. So thank you for the question. Always, always, always structure first, okay? Always structure first. Gosh, are we out of time? Yes. I'm going to answer this one last question because it's really a good one. And it was about the disconnect of the NQ. Where the heck is it? Oh, by the way, do I still like the Amazon? Let me answer these two questions because they're in the same window. So Ian, how are you, Ian? The question is, why does it seem the NQ is disconnected? You can use the QQQ for this as well, doing its own thing compared to stocks within it that it represents. Here's why I love the question, and it's at the heart of what we do over at Sector Secrets, which, by the way, you can check out at simpletrading.com/sector. QQQ, as of the addition of the XLC, XLK, and XLY ETFs, has really been broken down into three pretty popular ETFs. XLY, which is Amazon and Tesla. XLK, which is Microsoft and Apple. And XLC, which is Facebook and Google. When I say it is those stocks, what I mean is those names are the most heavily weighted names within those sectors. In other words, the QQQ or the Nasdaq futures has now these three compartments. It's been compartmentalized where those two stocks, really, it's two in each one, dominate the weighting of that ETF. So it's not that it's disconnected as much as the pull of each of those three ETFs is very different. It's been very different. So XLC has been a relative outperformer. XLY, mostly because of Tesla and Amazon, has been a laggard. And XLK has been quite choppy. Again, the culprit is Apple and Microsoft. So that's where the secret, the not so secret in Sector Secrets is, don't simply look at the broader index, but then, as I like to say, crack it open and look at the sectors and the stocks within it, okay? And then kind of up along that same conversation, XLY, Amazon, it recently fired a daily squeeze and is about 4 bars into a weekly, which I don't look at weekly charts for setups for trades unless my time horizon's minimally 6 months. It's got to be off the daily for me. But do I like the bullish position in Amazon? So my liking or not liking is going to start structure first. So green grab candles, double green, yes, pullback. We're actually pretty close to the 21 here, and could be a nice pullback opportunity for continued upside. All right. So slightly longer version of our Charts and Coffee. As always, thank you for being a part of the Charts and Coffee crew. While you're here at the YouTube, feel free to smash the like button. Leave a comment, leave a question. Me and my team do absolutely read it and read those comments, answer them very often. Or we sometimes will have a reply on the countdowntrader.com blog. So check that out as well. And then if you want to be reminded of these episodes, like on Monday, we have a holiday, I'll probably 99% be doing a show. Hit the subscribe button and you'll get a reminder when I go live with the Charts and Coffee show. All right, gang, have a great one. Have a wonderful weekend. Happy 4th to everybody. If you're in South Florida, heads up, we've got some weather coming our way. We got, I think she's a tropical storm now. We're up to the 5th storm of the season. So preparing for that. In the meanwhile, be good to each other. Have a good trading day.